Soybean futures are currently the most bullish item in the commodity index. Why?
Soybean futures are now the most bullish item in the commodity futures index. And there's three reasons for that. Number one is that China has come in and bought a record amount of U.S. soybeans for import in the 2021 season. That buying, also number two, has brought in some big professional buying. The funds are now almost long a record amount of soybeans. Technical signals were positive, and this new professional buying has pushed us up to new highs for the year.
Funds are now near record long corn, soybeans, soy meal, soy oil, and wheat. Can they sustain this position into U.S. harvest with macro financial markets turning lower?
With the soybean rally and China also coming in and buying U.S. corn and U.S. pork, and also some dry weather in Russia, Ukraine, Eastern Europe, and Argentina, we've seen a big increase in fund longs in all of the grains and oilseed complex. And the question is, can they sustain this position going into the harvest and with the macro financial markets turning lower? Personally, I don't think they can hold this position. I think that they need to lighten their position going into the harvest. But afterwards, we actually could see a rebound. I don't know if we make new highs, but in that fourth quarter of 2020 and first quarter of 2020, we have to do something we've never ever done before. We have to ship a record amount of soybeans and close to a record amount of corn out of the U.S. exports. So logistically, we've got to buy the grain from the farmers, we've got to move it to the right place, and then we've got to export it in a timely basis. And this should be supportive to the basis, maybe spreads, and down the road futures.
China continues to buy U.S. soybeans, corn, and pork. What is the estimate of their total soybean and corn imports, and how much will be from the U.S.?
China continues to be a big buyer of U.S. soybeans. We are now looking that they may import a record 100, maybe 102 million tons of soybeans in this 2021 year. And it could take 33, maybe 35 million tons of U.S. soybeans versus 16 to 17 last year. And in corn, they could actually bring in 20 million tons of world corn. And of that, 15 million tons could come from the United States. And so this buying by China could be in part because they need it. We're looking at their hog herd going up 31% from a year ago. Their sow numbers up 37%. And we also note that they may have lost some of their corn crop because of flooding. And today they announced that they are going to strategically increase storage in the south of China for energy and grains, just in case they need it, or there are some increased tension between them and world exporters. So this is a positive thing for the grains. And down the road, it could be a positive thing for the energy market.
What are the reasons for lower stock index futures?
Well, with stock index futures sharply lower today, it appears that the situation in Washington over the weekend has gotten substantially more contentious. The rule of thumb is that uncertainty means lower prices, and that very much is the situation today. Also, we have the ongoing tensions between the U.S. and China. So I think that with the selling we are seeing, that there probably will not be that much recovery today, maybe later in the week.
What is Federal Reserve Chair Powell likely to say when he speaks Tuesday, Wednesday, and Thursday?
Well, we have Fed Chair Powell speaking Tuesday, Wednesday, and Thursday. Of course, he'll talk about the economy. He also may talk about the need for more fiscal stimulus. He also may mention that the Fed has done its part with taking interest rates as low as they are, 0 to 25 basis points, other accommodative measures. He also may hint that if need be, there could be other tools that the Fed might take to stimulate the economy. But I think before he gets into that, he'll try to prompt Washington to do more in the fiscal area.
If the Federal Reserve needs to add more stimulus, what path will it take?
So with the Fed funds rate at 0 to 25 basis points, seems rather unlikely that there's any chance or a very limited chance of any type of lower Fed funds rate from here. But I think what is more likely, if need be, and I don't think this is likely to be the case near term, but if something needs to be done, I believe the Fed will rather resort to ramping up their asset purchases. Now, their balance sheet is very high already, but I think there could be some more room for more of the same. So ultimately, the Fed does have more tools in its toolbox to support the economy.